Alright guys, it's Sam Green from Trader Circle Emerald Financial here, and I'm just recording this brief video because we've just had another interest rate rise from the Reserve Bank, or should I say a lift in the cash rate. It was 0.5% or 50 basis points, which leaves us at 1.85%. This was bang on expectations. I mean, they'd pretty much signaled exactly this to the market. The market knew this was going to happen, and happen it did. So yeah, essentially we're now much higher than we were just 12 months ago from an interest rate perspective. And obviously the bank is doing this, they say, to combat inflation. Now, whether you agree that it's inflation or whether you want to call it something else, it's undeniable that prices are increasing. So consumer prices are going up 6.1% at an annualized rate for the June quarter, and the RBA does call that inflation. Now, the market has actually jumped strongly since this statement came out. And if we have a look at this chart, this is the XJO, or an index of our 200 largest listed shares. And this is where it was before the announcement. You can see that's 230. The market was at 69.60. And we're now about half an hour later, and the market is more than 30 points higher than where it was before the statement. You'd think that an interest rate rise would be negative for the market, but that hasn't been the case. We've actually rallied quite strongly on the back of this announcement. Why might that be? Well, there's a few reasons for that, but the main reason is that the RBA is no longer as hawkish as they have been in recent statements. They do acknowledge that a lot of the price increases are coming from factors outside their influence. And if you read the statement, you can get an illustration of that. And they also acknowledge that the economy is expected to start becoming a bit weaker in 2023. And you can see they're expecting 1.75% growth in 2023 and 2024. Now, obviously, if growth starting or expected growth is starting to decline, you would expect the interest rate rises to start slowing. And if we come down to the bottom of the statement here, we can see that though the board expects to take further steps in the process of normalizing monetary conditions over the month ahead, it is not a preset path. Now, for me, this is the main change in the statement. The last few statements have all been, we're going to keep lifting, we're going to keep raising rates to target inflation, and now they've changed their tone a bit. They're saying, well, we're probably still going to lift interest rates, but it's going to be dependent on the data. It's going to be dependent on what happens in the economy from here. So that's the real change for me. We've gone from having a very, very hawkish Reserve Bank, a Reserve Bank that's like, we're going to keep, hammering with interest rate rises, and they've moved to something that's a lot more, well, we're just going to wait and see. We've lifted interest rates a fair bit. We're going to wait and see how that plays out. So that change in tone was, for me, the reason that this market has rallied quite strongly. I imagine we'll start to see a little bit more dip in the Australian government bond yield curve as well as a result, and quite positive for the market in the short term. So our market pushing back towards 7,000 for the XJO, and whether we break through that or not, I suspect will come down to US markets and global markets, and whether they break higher or not from here. Alright guys, that's it for this one. So thanks very much for watching. If you are watching this on YouTube, please feel free to like and subscribe. It'd really help us out a lot. Bye for now.